I'm Orlando for Tradimo, and well, today we're going to look at a few markets actually. On the menu, we have gold, the DXY. The DXY is the US dollar index. We are going to look at the GBP versus the Japanese yen. We're going to look at crude oil. And the reason we're going to look at crude oil is because Matthias, one of our coaches here at Tradimo, had a great long uh, signal sent on our signal community last week, and it's now moving in our favor. And we're going to look at the pound yen, the pound versus the dollar, and the New Zealand dollar versus the US dollar. Now, if you are not members of our premium community, I'm going to show you what it looks like. This is our premium community. This is the premium forex channel where we share um, analysis, watch lists, etc. We have the premium forex signal channel where I send my trade ideas. We have the premium English channel where we discuss anything but forex, and the premium English signals where the signals are sent for commodities, stocks, equities, etc. So if you are not a member, I'm going to leave you on the chat a link where you can take a 1 month trial of our premium community. You're more than welcome to. And this offer is exclusive um, for our daily edges attendees. So let's start by looking at at the news terminal. There's not too much going on today in um, the economic calendar. I mean, there hasn't been any high impact events, but you can see here on the top right of my screen, the we had the eurozone trade balance that came out at 17.9 billion, with an estimate of 19.4 billion and a previous number of 20.6 billion. Right, this is a lower number than expected, and a lower number than last month. And well, that should be a little bearish for the euro. All right, we have the Italian CPI coming lower than expected and previous. The CPI is the consumer price index, which is a major analytic for inflation, right? And the lower that we get the month over month and the year over year CPI, well, the worse it is. All right, so CPI numbers fail on both month over month and year over year, with the year over year coming at 1.1 with an estimate of 1.2% and a previous number of 1.2%. Again, this is also a little bearish for the euro. Well, we have the French unemployment numbers, right? Let's look at the French unemployment rate, which came lower than expected and lower than the previous number at 8.4%. Still very high unemployment rate in France. And well, the first quarter unemployment rate came as expected at 8.7%. And again, very big numbers on the French unemployment rates, which again could be a little bearish for the euro. So any other than that, let's have a look at some. Well, let's have a look at the DXY. The DXY again is the US dollar index, and the US dollar index. Well, we always track the US dollar index, right? Um, because when we trade currencies, when we trade forex, the US dollar index is king, and of course, if a big move on the US dollar or a big volume coming in buying or selling the US dollar is going to have a little bit of repercussion on the market. So basically, this is our DXY chart And if you are members of the premium channel or the premium community, you already know that our big level is the 9770 level. All right. Now, basically, the 9770 level is our level because this is the level that was capped in the DXY to the upside before we broke with it on late April this year, a few weeks back actually, and but then we dipped below again and we faked it again. And right now we are trading inside of a triangle. This triangle that you're watching is the yellow triangle that is on my screen, all right? And we were capped to the downside by the 9720 level, which is the purple horizontal line that started right here at this low. So we were capped below or above the 9720. We dipped below, but again, buyers were found at this level. And we hit, and then we just thickened this out back because this is important, all right? We tested after dipping below the 9720, we tested the 9770 again, and we found this huge rejection candle, this big bearish candle, this big red bearish candle. Now, when we saw that big rejection of the 9770 level again, we immediately turned a little bearish, or immediately we turned bearish on the immediate time frame, meaning that we were expecting at least a test of the 9720 level again, and you're going to see when we talk about or when we discuss the gold chart, you are going to see uh, why we took where we took a gold trade, all right, or where was at the level that we were looking to buy gold, okay. But and the reason we were looking to buy gold is because gold had broken. Actually, let me just show you what I'm talking about, all right. Well, gold had broken to the upside with this white bearish down structure. All right, and if you remember correctly, if you are a member of the trading or premium channel, we did take a long trade at this around the lows at around the 1269, 1270 level, and we rode it all the way here. All right, and then we broke to the upside. We were testing these the second and the second. The second gray area right here, and we were looking to buy gold, all right? And gold was trading inside of this continuation pattern. And not only that, but we were looking at a bounce from the 9770 level on the XY. And if you know how gold and the dollar are correlated, if the dollar goes down, well, the price in gold goes up. So that was the rationality behind our gold trade, our gold long idea. We are still, our bias is still bullish in gold, but let me just go back here. But because we are breaking with the 9770 level again on the DXY, meaning that the US dollar is appreciating, and we are breaking with this with this yellow triangle, this could mean that we again on a bull run to test at least the 9820 level, which are the previous highs, if not going higher. So our bias in gold, because let me go back to the gold chart. Our bias in gold, because we broke to the upside with the previous base, which was capping gold to the upside, and we broke with this very structure. We are still on a bullish bias, but in my opinion, oops, I'm sorry. In my opinion, if we break now, let me just thicken out this trend line for you guys, and I'm gonna change it to magenta, right? And I'm going to thicken this out, right? This is it. Now, in my opinion, if we break below the two dotted red lines around the 1288 and 1286 level, and we break with this magenta trend line, that would mean that the bullish momentum in gold would be done, in my opinion. All right. Now, what we could also be seeing is a retest of that dotted line where my mouse is placed at right now for a continuation higher. Now again, this dip in gold was driven by, um, let me see, it was driven by this rally in the US dollar. All right. Now, this rally in the US dollar, if we continue to rally in the US dollar, it's going to be very hard for gold to rally too. So we are going to keep our eyes very close on that US dollar rally before we take another decision on gold. All right. Now let's go. That's about it on the gold part of this show. But if you guys have any questions, again, I'm more than happy to respond to them. Right now, let me just extrapolate this trend line just to see if we are in some kind of a structure. And yeah, I mean, we are in some kind of a structure, trading structure, and this spike high was perfectly timed with this parallel line that price was being supported at. So basically, yeah, I mean, we could be going down to test this zone. And if actually, I'm not done with all that. If we test this zone right here, I'm going to point it out with this green rectangle. If we test this zone right here, this would be a great opportunity for a buy in this precious metal. And of course, I would put my stop losses below the previous low around here. But I would wait for a rejection of this level before taking any decisions. But it seems like it that we are going to be retesting that. So I'm going to delete what this um, continuation pattern that we were thinking that we were trading in, and we are going that area to be tested. Okay. Now, let's go and let's have a look at the U.S. dollar Japanese yen. Now, the U.S. dollar Japanese yen, just a couple of levels here, nothing much going on. Let's go to the daily, and the real level that I'm waiting, or that I was waiting for a test, is the 108.80 level, or the purple trend, or the purple horizontal line at the bottom of this dip, right? This horizontal line here at the 108.80 level. Now, we didn't quite get into the 108.80 level, and we are making some kind of a reversal around these levels. Now, the reason this is going to be tough, now let me just eliminate this trend, this horizontal line, because I want a red one, is because between the 109.60 and then 109.85 level, we have a very big zone of resistance, which was previously a zone of support. All right. Now, let me just draw this rectangle for you guys, and here it is. Now, this is the big zone that we were discussing in our premium, um, our premium chat. All right, and this is the zone uh, that the U.S. dollar Japanese yen is going to have trouble with with breaking. Now let's go back to the 4 hour chart and let's go back to the end of this. And as you can see, right now we just broke with the previous highs and barely broke with the previous highs. And then this is due because of the US dollar rally. But again, I'm going to show you the actual level that I think we need to break in order for us to consider a gap fill. And that this is the move that I'm expecting if we break with this um, green area right here. Now the green area is my bull bear zone, and if we break with this zone, I'm expecting a rally at least to the 110.65 or to the 111.10 for a close of this gap. Now, if we reach this zone right here, which also is a pretty big area of resistance because it was being tested as support, or it was where buyers were found or positioned in historic price action. It is also an area of big volume, and of course we have the gap fill. If we rally all the way up here, I would expect at least a dip to this previous 110.65 level for a continuation and a retest of the 112 level. Again, the 112 level on the US dollar Japanese yen is a huge level. It's a very important level on the daily, and not only that, if you see right here is where sellers were positioned strongly, and it was actually where buyers were inflict all the sales orders. All right. Now, very big level here, and this is what we are looking at on the US dollar Japanese yen. Again, we need to break above that 110 level at least in order for us to consider a long position on the US dollar Japanese yen. All right. Again, this idea will be boosted by a rally in the US dollar. So keep an eye on the DXY, and that's keep an eye on the DXY for a break above the 97.70 level again. Big level, the 97.70 level. Not only that, it confluences perfectly with this descending resistance that we are testing as we speak, guys. So keep an eye for that break. I think with all those tests at the 97.70 level, we are due for a break above, maybe a retest of that 98.20 level. Okay, now let's go back to the charts. This is the US dollar Japanese yen. Again, we might, this is one possible scenario on the US dollar Japanese yen, or we might be going lower. Now let's have a look at the Japanese at the pound versus the Japanese yen. Now the pound versus the Japanese yen is a very curious, or it's at a zone that I was expecting, that I was expecting some kind of reaction or rejection. Now if we go to the daily and we go back, you can see here. I'm going to grab a green. Um, Square, and I'm going to show you this based on this was where August between August 10 and August 23. Apparently, all the month of August in 2018, we spent trying to break below the 140.40 level, and we were unable to do it. And this is where buyers were found. This is where we had that big reversal. So yeah, it is a big level on the daily. Let's go back to the 4 hour chart, and if you look closely, this is the 140.40 level, the dotted purple line that we are trading in right now. And if you look at those two candles, let me just thicken this chart out for you guys because I want you to look closely at what's going on. If you look at these two candles right here, we did found some rejection, and I mean, we are in a very strong down move. We have moved down for about 500 pips from the highs, and yeah, we are still with the gap open. Let's take a look at that. All right, that gap open. From the close on that Friday, we closed at 146.35, and from that close, we have dipped to the lowest 616 pips. All right, we have dipped 616 pips without without rallying or without a real correction, and we have been trading inside of this bearish structure, the white bearish structure or the white bearish channel that I have in my chart. Now, if you look closely here, we do have some rejection going on, but we are still inside this bearish channel. All right, and not only this is an important historic level or an important historic base, but it is also the tool. All right, now I need to zoom in because I have the annotations on my chart. It is also the 223.6 retracement of the B2C move and the 213 expansion to C move. All right. This is important because those well, this is a Fibonacci cluster, or this is what I call a Fibonacci cluster. And not only that, if we go back to the daily, this is the 50% retracement of the entire move to the upside. So very Fibonacci cluster going on here on the pound versus the yen after an important dip of it. When we broke with this previous highs at around the 143.90 level, we dipped very strongly for about 360 pips. So basically, we are looking, or we are what we are looking here, or we are looking for a possibility for a test at least of these previous highs. Now let me grab that green tool. I know that the colors I'm using are very strong, but I mean, I think that they are really powerful, and those levels are going to be sticking with you guys. So basically, yeah, I mean, we are looking at the possibility of a move to these previous lows, maybe for a continuation to the downside, right? And a final break of that 140.40 level, all right? But I really think that in order for us to break with the 140.40 level, we need at least a rally um, above or a rally that breaks the previous highs or breaks with this structure to a previous point of control and the previous area of big volume, which is the 143. Oh, I'm sorry, 142.40 level, or that green zone right here. So we are going to try to capitalize on that, but we need a break at least above the 140.84 level, and for us to even consider a long position here. Again, if you are not members of my premium community, I urge you to take the 1 month trial because we talk about this every single day. All right, let's go have a look at the New Zealand dollar, US dollar. Now, the New Zealand dollar versus the US dollar, it's in a similar position, guys. I'm going to really zoom in on my chart because I want you to see the actual level that we are trading. All right. Now look at this big reaction in this area of the man. All right. Now we got that area of the man at the bottom of this tick of the this tick at around the 065 58 level, and actually well the 065 65 60 level. All right, we came, I mean, we broke with this purple zone, and we came dipping for about 130 pips. And I'm going to show you this rejection candle because this is very important in my analysis. All right, now if you look inside of this green square, you can see that we have a very big wick here, which signals big rejection on this demand level. And right now we are trading around, well, exactly at this demand level, and we found the same week right here. A candle with a big break to the downside, signaling big rejection at the demand level, and signaling also that the big buyers were positioned here. And we moved up, all right. But we what we did is we actually just tested this the upside of this bearish channel, and we are still trading inside of this bearish structure. All right, and today let me thicken this chart out for you guys. Now again, just a little more. And today, what happened is that we had a big bullish candle. All right, that broke above and closed above. This is the 4-hour chart, so this candle means something. All right, candle from low to high on the candle. I think we rallied for about 37 pips, which is big given the average range or the average daily range from this currency pair. I don't have the exact number right now with me, but it can be more than 50, 60 pips, the average daily range. This is one of the reasons I don't like trading the New Zealand dollar versus the US dollar. I consider this currency very, very slow. But if we can capitalize from a bounce of this big area of demand, I would take that trade. Of course, again, this is clearly not a buy position just yet, but it is on our watch list, and the reason it is on our watch list is because buyers are being found all over. I mean, again and again and again at this level. Now let's just zoom out and let's have a look at the levels, the possible levels. So what we're looking at to move to this previous base, um, that would be a rally of around 120 pips. But we really need a clear break above this structure and above the previous highs in order for us to consider going long on the New Zealand dollar US dollar. Right now, we would be in a very high risk trade to take a long position. That's not the way I trade. I hate trading uh, or buying anything at market. I need some clean breaks above or below my levels in order for my trade ideas to be considered, all right, or to be justified. But this is a very, very nice currency pair to have on your watch list. I would say that at least. Now let's have a look at the pound versus the dollar. Now the pound versus the dollar was trading, in my opinion, what I said in no man's land. All right, it was trading above the 128, 48, 128.50 level, and with that rally on the US dollar, we finally hit that purple level, that previous low on the previous base, or that we bounced off of on the February the 15th, 2019. All right, so very important level right here, because actually, well, this Fibonacci level from this low to this high would be invalid because we already rallied higher. So just looking at some levels, the pound is trading at right now at a high volume zone, but I don't see a trade on the pound versus the US dollar. Um, I don't see a trade right now, right? Just a level that we are trading in. And if you were expecting something, maybe a retest of this green zone that I'm about to draw, all right? This green zone that I'm about to draw for a continuation lower. This is a trade that I would definitely take a short position at around the 128.80 level if that happens. But for the time being, I'm flat on the pound versus the USD. There's nothing going on too much, and those are the levels that I'm watching. Now, if we take a look, let's take a look at crude oil. Now, I told you that our coach Matthias K was looking for a continuation or a bullish continuation on crude oil, and he nailed this button. All right, bottom, not bottom. Sorry. So if we go to the hourly, I rarely look at the hourly chart, but this is worth looking at, right? Because this is a high volume area. All right, this is a not only a high volume zone on crude oil. I know that this is very bright, guys, but I love using bright colors when I'm doing these shows because the levels stick with you, and they stick with me. All right, so around the 60 level. Remember that this is the US oil June 2019 contract, futures contract. Thank you, Paul. Again, 2016, 2019 futures contract, and if you notice here, this level of support held perfectly, and even after this massive bearish move to the downside. All right, this was a very big bearish move. Now let's just pick this out because I want you to see the actual candles that I'm talking about. A very, very bearish move. Very three bearish for a 1 hour candle, and bam, buyers were found here. Of course, this was also short-term sellers take profit areas, which have bullish um, a push on any asset, and but also buyers were found here. And now let me just zoom out again, and now we are trading up again. All right, this was an actual setup that now I'm going to use white lines for the setup because you know that purple lines are for move. So this white um, continuation pattern was a very nice tradable flagish. Actually, was a pennant. Let me just draw it from here to here. Was a pennant. So if we go back and grab the this, and I'm going to use the purple or the magenta, all right, to signal the move. Now, if you look closely, we moved up from this buy area that Matthias pointed out, and we moved inside of this pennant. And when and when within the pennant we touch again at this buy zone, boom, price exploded to the upside. Now, I'm going to eliminate all these lines that I just drew because we are going to go back to the 4 hour chart. And when you're trading crude oil, I mean, it's important for you to stay on the lower time frame because if you're trading futures contracts, you want to maintain the risk very low, and if you go and the higher you go, the bigger your risk is going to be with one contract. All right. So this was the setup to take a break above these highs for about 143 ticks and going, and that 143 ticks and going would have had just a 90 tick stop loss. All right. Now let's go back to the 4 hour chart and let's have a look at what we are dealing with. Now, this is somehow now. I mean, I'm just going to delete this because this doesn't make sense at all. Now, what's going to be tough for a break above, or what I look at when I see the make it or break it area is around the 64 zone. Now, the 64 area is going to be very difficult for crude oil to move above, but I personally didn't take this trade, and now I'm picking my head because it looks strong and very bullish. All right. Now, if we break, just look at the past two daily candles or three daily candles, very bullish move. And if we break above the 66.30, we might even be testing the 74 level again. So, insanely good trade by Matthias there. And I think that we are done for today, guys, on the daily edge. If you have any questions, I mean, feel free to ask them. But those are the levels that we are watching on these currency pairs. And if you are not part of our premium community, again, um, this is you have the link on the chat to join us for a 1 month trial. So I'll be doing this every day, and of course, thank you for tuning in, and I will see you guys tomorrow. All right, bye.